Okay. Okay. Well, good morning, good afternoon, and good evening. Welcome to MaGESpire and Canada Witt present Into the Dragon Lair, Hong Kong as a hub for family and private wealth. I am Bowie Lau, and I'm your host and organizers today. Before we get started, I have a disclaimer. Anything we discuss should not be construed as any form of financial advice or solicitation to invest. And before making any investment decision, please make sure you do your own research and you do your own due diligence. A quick introduction of myself. I'm a woman with many faces. I run MaGESpire, which is a fintech venture development and education group. One side, I'm in the angel investment and venture capital space. I do direct angel investment into technology company. And I also run a consultancy arm helping companies in terms of business development, market access, and connecting them to the right people. And I also run MaGESpire community and conduct lots of educational talks in fintech, technology, and now in family offices. So before February this year, I used to involve with so many different physical events in Hong Kong and Singapore, but thanks to COVID-19, I now ship all my events virtually. But the good thing is I get to invite all the people in the world to join me and also to be my guest speakers. And I work closely with some family offices as I also help with them for deal sourcing, and also sometimes we do co-invest together. And so some people ask me, what is family office? Well, in this simplest form, a family office is a private office for a family. So typically families or ultra high net worth individuals, usually defined as people with a net worth at least 30 million US dollars in investable assets. Family offices comprise a high-end subset of the private wealth management business, and they have become increasingly important to the whole financial services industry, not just because of the business potential inherent in the massive amount of asset under management belonging to these family offices, but also as evidence of the financial center's overall wealth management capabilities. As such, there has been much fancier, very intense competition among jurisdictions to attract wealthy families interested in establishing family offices. And there has been robust growth in family offices in recent years. And according to Camden Research, there were some 7,300 single family offices worldwide as of July 2019, which is 38% more than end of 2017. And with that total, Asia has recorded growth of 44% during the same time period, higher than anywhere else in the world. And Hong Kong can leverage this strong growth momentum in Asia and further develop into a regional hub for family office business. And Asia is now known to be the home to a quarter of the wealth buildings there. As wealth in Asia has been exponentially growth, Hong Kong's position as a family office hub has also grown. But on the other hand, yes, as of late, Hong Kong has been hit by several blows from the US-China trade war, anti-government protests, and the promulgation of the national security law, and the latest announcement of the China's wealth test that will impact Chinese base in Hong Kong and beyond. So can Hong Kong still be a family office hub for wealthy families? We're going to deep dive into this topic. And today I'm very excited to co-organize this event with Pádraig Walsh from Canada Witt. Canada Witt is a well-established and recommended independent law firm in Hong Kong. Its private client practice is led by Eddie Look and advises family offices and high net worth individuals on family office governance, wealth management, and succession planning, wills, trusts, and probate, and family offices investments. The team aims to provide practical advice with discretion and sensitivity to clients' needs and preferences. They work with an international network of accountants, tax advisors, corporate and trust service providers to ensure that clients receive comprehensive and seamless advice that precisely addresses their circumstance. And also like to thank Invest Hong Kong for supporting, for being our supporting organization for the event today. And today the agenda is very simple. We're going to have one small keynote on the same topic, and then we're going to jump into a very insightful panel discussion on family offices in Hong Kong. And without further ado, I'd like to introduce my first guest speaker today, Mr. Dixon Wong, the Head of Financial Services at Invest Hong Kong, and he's going to talk about the Hong Kong, a leading hub for family offices. Let's welcome Dixon, or yours.
Thank you, Bowie, and I hope you can hear my voice clearly.
Yes.
Good evening, everyone in Hong Kong and Asia Pacific, and also good afternoon or evening to those from Europe or US. It is my great pleasure to give a keynote speech at tonight's webinar, and I would particularly like to thank Bowie for moderating this webinar. That gives me an opportunity to speak together with the three distinguished speakers, Pádraig, Collie, and also Pádraig. I believe many of you are familiar with Invest Hong Kong, and very briefly, Invest Hong Kong is an investment promotion agency of the Hong Kong SAR government. We have representatives based in over 30 cities worldwide to support overseas and mainland business to set up and expand in Hong Kong. So my keynote message here is very simple. Opportunities and benefits for Hong Kong to develop as a family office hub. Firstly, concentration of family wealth in Hong Kong. Hong Kong had the greatest or highest density of ultra high net worth individuals with wealth above US $30 million each among all countries and areas in the world, with the second largest population of ultra high net worth individuals among cities around the world, just behind New York. According to Asset and Wealth Management Activity Survey 2019 published by the Securities and Futures Commission of Hong Kong, the AUM of asset management and fund advisory business conducted by the licensed corporations and registered institutions increased by 22% year on year to 20,000 billion US dollar. And asset held under trust increased by 11% to 3,800 billion. And the number of licensed corporations carrying out asset management under Type 9 regulated activity in Hong Kong increased by 10% to 1,800. So secondly, why I would say opportunities and benefits for Hong Kong to develop as a family office hub is because of the strong growth of family office establishments in Asia. As Bowie has highlighted earlier, according to various wealth reports, including Camden, Credit Suisse Global Wealth Report, and Knight Frank's, around 39% of the global wealth was from Asia, and around 28% of the ultra high net worth individuals were living in Asia as of end of 2019. In comparison, in terms of family office establishments, family office located in Asia only represented around 18% of the total number of family offices. So the third one is the development of Guangdong, Hong Kong, Macau, Greater Bay Area. As we may heard about the outline development plan for GBA, published in February last year, contains several policy initiatives with regard to facilitating cross-boundary financial services. Some follow-on directives have been announced since the publications. And in November 2019, after the meeting of the leading group for the development of the GBA, the central government introduced various measures, including exploring the establishment of a cross-boundary wealth management scheme in the GBA, As one of the most prosperous and wealthiest regions in the mainland, almost 20,000 of the 84,000 ultra-high net worth families in the country were based in GBA. It's approximately 23% of total. So with growth demand from cross-boundary asset allocation and policy breakthroughs in the region, market participants envisage strong demand for family office services from GBA ultra-high net worth families in Hong Kong. At the FSDC, the Financial Services Development Council has recently published a relevant report on this subject as well. Last but not the least, vibrant investment opportunities affecting family office. Well, with mainland China remaining one of the fastest growing economies and many families from Europe, North America, and Middle East seeking exposure to that growth, Hong Kong will continue to serve its role as the gateway for overseas capital investing into vibrant markets. The fact that Hong Kong is the largest PE, private equity market outside mainland, and the largest hedge fund hub in Asia shows that investors see opportunities and potentials in benefiting from direct investment for investment products and projects, which would in turn attract family office who are looking for long-term investment opportunities here. Furthermore, the rapid growth in ultra-high net worth families in the mainland presents Hong Kong with significant opportunities to service such family office ecosystem, which has much potential to grow, serving as the premier investment gateway for the management and diversification of the capital. So that's, I think, my key message is the opportunities and benefits for Hong Kong to develop as a family office hub.
Thank you, Dixon. Thank you. That will be all for your small keynote, right?
Yes.
I can jump to panel discussion.
Yes, please.
Okay. So this is the a very exciting and insightful discussion I'm really looking for. I guess I already did my introduction. And Dixon, I think beside, you're the head of financial services in Invest Hong Kong, I guess, can you tell us a little bit more about yourself?
Okay. Actually, I joined Invest Hong Kong last year. It's approximately 18 months in total. I joined Invest Hong Kong from a investment banking business. So my experience more on the front office stuff like, IPO, M&A, this sort of business activities. Invest Hong Kong, as I mentioned earlier, is a government agency for market promotions established in the year 2000. I'm very excited to join the team here. Although it is a government network, but Invest Hong Kong doesn't really look like, typical government organization. It's a front office, client-facing organization. We need to attract foreign investors from around the world, international and mainland. My team is more on the financial services. For example, clients in the asset management, insurance companies, banks, virtual banks, hedge fund and private equities, and more recently, family offices are part of my team responsibility. So we don't have a very big team, but we have approximately 6 staff members in total currently in the financial services team. We are trying to build out the family office team in the very short time future. So this will be the key target in my mandate. So family office, I think in terms of licensing, we have an expert here. Pádraig will explain a bit more on the licensing. Clear licensing rules. I'm sure GBA opportunities can turn Hong Kong into a family office hub. Securities regulators' recent clarification of rules surrounding the licensing is also likely to attract more family offices, wealth managers who deal with the ultra high net worth, dynasties. So that's it from me.
Thank you, Dixon. Yes. Okay. We got to know you a lot better now. I also like to introduce the rest of the panelists. We have Pádraig Walsh from the partner of Witt. We have colleague Ching, Managing Director at AsiaCiti Trust Hong Kong, and also Patrick Tsang, the chairman of Tsangs Group. So let's start with Pádraig. Why don't you introduce yourself and tell us a little bit about you?
Certainly. Thank you, Bowie. Well, my name is Pádraig Walsh. I'm a partner in the corporate and commercial team at Witt, which is an independent Hong Kong law firm. My particular area of interest is actually in relation to the technology sector. But in the course of doing that kind of work, I come across a number of family offices that do angel investment or other kinds of venture capital investments into technology businesses, and I've given them guidance in that capacity.
Thank you, Pádraig. And Collie?
Hey, hello everyone. You hear me okay?
Yes.
Okay. Yeah, thank you for the opening speech. And then my name is Kelly. I work for AsiaCiti Trust in Hong Kong. I have been in the trust business for about 15 to 20 years. Yeah, but I did have opportunities to spend a few years in China helping the Chinese family or Chinese client to do outbound investment as well as to set up offshore trust. So in Hong Kong, we do help our clients, mostly Chinese clients, to do family trust setup, to set up PTC structures, to do PIPO trust, employee benefits trust, etc. So happy to know you, all panelists today. Thank you, Bowie.
Thank you for accepting our invitation. And Patrick?
Hi everyone. I'm talking from London right now. Thank you for Bowie for inviting me. Thank you for Dixon and InvestHK for putting this together with Witt. Very honored today to be here. I'm chairman of a family office in Hong Kong called Tsangs Group. So we're a 4th generation single family office. We're sector and location agnostic. We invest mainly into tech companies and then early stage ventures. And then we try to take the companies public in Hong Kong, London, and New York. And here today, I'm trying to work with the rest of the panel to show the rest of the people listening that Hong Kong's still great, and we welcome more business and investment here.
Absolutely, thank you, Patrick. Let's start with Dixon. I know you did a presentation on Hong Kong, but can you elaborate a little bit more on the Hong Kong's unique role? The Hong Kong's unique advantage is the leading international financial center in Asia, and its close tie to mainland China no doubt makes it a preferred destination for family offices. But how can we best capitalize on these strengths? Dixon?
Sorry, I forgot to unmute.
Sure.
Thank you, Bowie. Since we are talking about Hong Kong's unique advantage as a leading international financial center, so I would say we should understand the families are now establishing the family office in a selected number of global hubs or offshore location based on some key factors, which are unique advantage for, say, for example, investment opportunities. Hong Kong is already the largest cross-border private wealth management hub in Asia, and also the 2nd largest in the world. So both, I think, SFO or MFO can leverage Hong Kong's unique advantage of being a dominant gateway between mainland China and the rest of the world, and tap on the tremendous asset and wealth management opportunities. Family office seeking investment and business opportunities will benefit from establishing a presence in Hong Kong, which offers easy and convenient access to the GBA, the Greater Bay Area. The number of unicorns in the GBA is growing, and the valuation of unicorns in GBA increased from a survey, based on a survey from 3 100 billion in 2017 to 600 billion in 2019, over 2 years. So under the GB, Hong Kong is also working with mainland China to explore the establishment of the Wealth Management Connect scheme, which will allow two-way access of a wider spectrum of wealth management products in both jurisdictions. The second thing that I would like to highlight how we can capitalize on the strengths of Hong Kong is the regulatory framework and also the tax regime. And I'm sure the expert here, speaker, will talk more deep dive on that. Hong Kong has a very simple and competitive tax system with no capital gains controls. Business and individuals in Hong Kong enjoy one of the most tax-friendly systems in the world. Only 3 direct taxes are imposed, and these are generous allowances and deductions available, which can reduce taxable amount. So besides a strong regulatory framework for protection of investors, including family offices who decide to operate in the city. The third one is the availability of professional talents. Recruiting and retaining professionals with relevant experience is one of the key factors for family office investors who are interested to set up here in Hong Kong. The strong professional services industry in Hong Kong is supported by a highly educated and skilled workforce that is adaptable, industrialist, and also speak multi-language, making them the ideal providers and services to large and cross-boundary projects and commercial disputes, among others, from banking and fund management assistance to legal advice, tax consultancy, and more. Family office in Hong Kong can enjoy a full range of these professional services to support the growth and also the investment. And lastly, Hong Kong is a regional center for philanthropy and also sustainable finance. There's a strong support to sustainable banking and green finance from the Hong Kong banking regulator, like Hong Kong MA. Green and sustainable banking also phrase the regulatory approach to promote green and sustainable developments of the Hong Kong banking industry. Lastly, I think global ranking also one of the key factors. Hong Kong has risen 1 place to 5th in the latest global financial index, financial centers index, which is GFCI, recently announced it just 2 weeks ago on the 25th of September. It is the only financial hub in Asia named in the top 5 for each of the categories, namely business environment, human capital, infrastructure, financial sector, and also reputation. So I think these are the unique advantage of Hong Kong.
That's great. I'm very happy to hear that. Knowing the fact, I was born and raised here, of course, Hong Kong is my home. So my next question goes to Pádraig. A more flexible regulatory regime and coupled with a higher degree of clarity on the capability or potential licensing exception from the SFC will be beneficial to Hong Kong's position as an attractive jurisdiction for the establishment of a single-family offices or multi-family offices. So with that in mind, in what circumstances will securities license be required for the investment activities of family offices?
Well, if we approach that question maybe first by dispelling a myth, sometimes you hear people who will say, I'm a family office, I don't need to be licensed. And that's not always correct. In fact, frequently it is untrue. So one of the things that you have to do if you are setting up a family office or you're operating a family office is to be mindful of whether or not the investment activities that you're conducting trigger any requirement to obtain a license in Hong Kong from the Securities and Futures Commission. And actually in that, the Securities and Futures Commission doesn't say, a family office means, and give you a definition, and then if you're within that definition, certain rules apply. They're actually agnostic to the nature or the structure or the form that a family office takes. What they're really focused on is whether a person in the broader sense, be it a company, a trust, or an individual, is engaged in a regulated activity, whether they are carrying on that activity for business purposes, and whether they're doing so in or from Hong Kong. And if you tick those three boxes, then yes, you will need a license. So that means that what you should do as a family office is to start looking at what are the regulated activities and whether you are conducting them as a business. Now, the most relevant for family offices, particularly in relation to the investment function, is whether it would trigger a license obligation to obtain what's called a Type 9 license, which is for securities and futures contract management, basically managing a portfolio of securities. Now, securities in that sense is quite a broad term. So it's not just, publicly quoted shares in stock exchanges. It can also be acquiring or managing interests in funds. It can be doing things like even venture capital and private equity, because there you would be quite typically investing in private companies that are not incorporated in Hong Kong. So it's a broader range than you might traditionally think. However, the SFC has come out and has clarified what are some of what you might call the safe harbors for family offices in respect of whether or not they need to obtain an asset management license. And the principal one that family offices can look at really apply to single family offices. And there what the SFC says is that if it's genuinely a single family office, in other words, it is something that is managed entirely, wholly and exclusively within the family unit, either through a corporate group, which has got a 100% chain of ownership that is entirely within the family, or by virtue of management by a trust, where the trustee is operating as an internal unit of the family operations. In those kinds of single family operations, there is an exemption from the requirement to obtain an investment management license in Hong Kong. Now that's to be contrasted with multi-family offices, which is where you have a management operation, an investment management operation that services a number of different families and their wealth management interests. And those circumstances, those kinds of businesses are typically run as a business, and they're not run on the basis where it is within a single family. And now, if that business is conducted within Hong Kong, it's quite likely to trigger a licensing obligation. Now, that said, even if a licensing obligation is triggered, that's not necessarily a bad thing, because the badge of being licensed is one of the hallmarks of having good systems and good processes in place in respect of the management activities that are being conducted. And for fairly straightforward investment management businesses, which is usually the case for family offices, there is a tried and tested route to obtaining those licenses from the Securities and Futures Commission.
Wow. Oh my God, this is such a big topic, and everything is in your head, Pádraig. It's amazing. So does it mean if I'm a multi-family office providing services to single family offices, I can get the license exemption?
No, because you are a multi-family office. So you're providing that investment fund service as a business, and you're doing so in or from Hong Kong. And it's an investment management function to a third party. It's not within your own family, it's for a different family.
Sure, got it. Okay. Thank you, Pádraig. Kelly, so I know you have served and also currently have many clients, right? So what do you see, the trends from your clients in relation to the needs of the family office?
Well, thank you, Bowie, for the question. We see an increasing trend for our clients or a prospect asking about the setting up of family office in Hong Kong, or checking on the services offering by the multi-family office. And I do, recently, I do have two very interesting observations about that. The first one is, for some families that we work with, which had already set up their family office, This family set themselves up in a very nice building in Hong Kong, like with a team of investment experts, because Hong Kong is full of like talented people, right? And then they also employ capital market analysts, company secretarial staff, and administration staff, etc. Most of these offices are set up by the first generation. And then they are now in the process of like passing the control or the passing on the money to the second generation. But during this process, they do realize that they need to put together some like proper family governance in place, or they will have to revisit the topic. At this point, then we see most of these families, they need to, and then they are willing to talk to outside expertise, like for to get help. They talk to the legal advisors, they talk to the trustee, they talk to the family lawyers, whether they need to amend the shareholders agreement when they are talking, when they are just to use a holding company for the families, to make sure that the existing shareholders or the future shareholders of the holding company are still like families only. And then they will have to think whether they need to amend the M&A of the operating companies, or whether they need to look at the members in the protector committee if they already have a family trust established. So this is my first observation about the families using single family office. And then the second observation is that in the past like 5 years or so, we see some of my new clients, definitely some of my new clients are more interested in the service offered by the multi-family offices. I think this is because they are very young, because at the average age of our client nowadays is becoming younger and younger, and then their needs are quite different from the families like a few decades ago. In addition to this investment advice or the creation of more wealth, the younger families would appreciate the wide range of like information shared by the multi-family office platform. For example, they need information for the education for their kids, like, or they want information about lifestyle or sports, or they will need to assess, they will need the referral of the shortlisted professionals, like for their, for example, the trustee, the lawyers, the accountant, etc., to help them to set up structures in Hong Kong. Like for, it will include the setting up of trust, the private trust company, the fund structures. For example, we do have a new limited partnership fund, just the law, we just passed the law, and then this is very welcoming by most of the investors, and then so they would like to set up fund structures underneath their trust, or they want to have IPO planning, etc. So these youngest families realize the platforms offered by the multifamily office is sufficient for their needs at the moment, because they're still very young, and then their family are still like just a couple, and then they don't need to set up the single family office as yet, and then they will find the multi-family office services is a very like cost-effective structure to use at the moment. So this is the two observations that I have on this area.
Yeah, thank you, Collier. I think that also triggers, lately I do see there are lots of multi-family offices established to serve the need for these single family offices. Thank you. So speaking about single family offices, my question goes to Pádraig. You obviously run your own single family offices, family office, right? So what, in your view, as a single family office, what are the advantages and also disadvantages of the Hong Kong market post COVID-19?
Thank you, Bowie. So first of all, I think Hong Kong's uniqueness is that it still remains a very important financial hub. I'm not going to go into the advantages. Dixon's already mentioned all that. But what COVID has done has been some good and some bad. On the good side is it's helped accelerate a lot of the fintech growth in Hong Kong. So COVID has been a big global pandemic. It's not just been hitting China or Hong Kong, but it's literally every person on the planet has been affected, some good, some bad. In terms of as a disease, of course, it's bad. From a business perspective, where there's disruption, there's always opportunity. So actually investors like ourselves, we actually think that COVID is a great accelerator. It puts a lot of opportunities for us. So we're positioning ourselves for 2021 when a lot of companies will not be able to survive. Then there'll be a lot of cheap valuations. That's where we can come in and do a lot of good cross-border M&A. But regarding to fintech itself, number one, it's accelerated the growth of some fintech companies. And also the Hong Kong government has done a lot, including HKMA, introducing a lot of initiatives to help promote mobile banking and also the virtual bank licenses. So we've seen that there's going to be a lot of collaboration between the traditional banks and also a lot of the new money kind of tech companies such as Tencent and Alibaba, which is going to become more and more prevalent. I think the HKMA has also done a great job in adopting this, where half of the population now is using like the FPS, and we're going more and more towards like mobile banking. What it's done on the disadvantage side is that unfortunately Hong Kong's big disadvantage is that the real estate prices are very high. And as a result, then people are going to do less of bricks and mortar business. A lot of traditional business like F&B, restaurants, bars, all those kind of business will suffer a lot, which means that people have to do more takeaway, more delivery. And as a result, food ordering apps have been great. One of the opportunities I see in Hong Kong is that although we've had a lot of turbulence in terms of local domestic protests, we've also had big global events such as the US-China trade war. Opportunities created, such as in the New York Stock Exchange, a lot of the Chinese companies that have been listed in the NYSE or NASDAQ now have to find an alternative or a second home, and Hong Kong is the perfect place. Our proximity to China and also the advantages which Dixon mentioned on GBA is a great thing. We're bigger, we will be bigger than San Francisco Bay Area, the Tokyo Bay Area. There won't be a more wealthier place than the Greater Bay Area. So I'm very, very bullish on that. In terms of the stock market, in 2019, 315 billion Hong Kong dollars were raised. We're still one of the top IPO places to go to. And the next, the forthcoming Ant Financial Group IPO, it's going to be a $200 billion US valuation. That's going to be the biggest fintech company, and that will help raise our reputation. And Hong Kong was still open for business. And one thing I keep repeating to my friends and also other people outside Hong Kong and including Hong Kong is COVID, protests, all this kind of stuff. We all have to go through different kind of disruptions. It'll all go over at some point. I don't know what the time is, but it will pass. And what will happen is Hong Kong is back in business. And I think the future is getting brighter and brighter. So come to Hong Kong and invest more.
Thank you, Patrick. That was a very nice analysis on the advantages and the disadvantages. And I totally agree with you, especially for the fintech part. I think these are the mutual interests that we both have. We're both into the technology companies, and we do see a lot of potential there, especially in the Hong Kong jurisdiction. I think we just recently granted many license for the digital bank. And in 2 weeks, I actually will be moderating a big panel about digital banking. And stay tuned, I will share that information with everyone later. So my question goes back to Dixon, right? While Hong Kong has the plenty of potential to develop as a hub for family offices compared to neighboring jurisdictions such as Singapore, would you agree that we still have room for improvement in such area, such as regulation, innovation, talent, and tax measures?
Thank you, Bowie. I think my view is that every country would have its unique and distinct feature. So Hong Kong has its unique advantage. Other countries have their distinctive features as well. In Hong Kong, I think has plenty of potential to develop. Say, for example, in terms of talent, currently there are many courses related to private wealth management, private banking, family office offered by various high education institutes that are available in the market for those who are interested in learning about FO and PB industry. To further strengthen Hong Kong as a family office hub in Asia, Invest Hong Kong always keeps close dialogues with the industry think tank, for example, the Financial Services Development Council, and to develop and also identify some close dialogues to understand what's happening in the industry, and also to find out what's missing piece in order to cater for the needs of the potential family office investors. And on the other hand, on regulation or new measures for GBA, as highlighted by Pádraig just now, in terms of regulation, I understand some people may consider other countries with other incentives targeting FOs. Over the past few years, as you can see, the Hong Kong government, including Hong Kong Monetary Authority, the development of Stock Connect, Bond Connect, have facilitated the flow of capital between mainland China and Hong Kong. The growing wealth of mainland Chinese is leading to increasing demand for investment diversification to offshore assets. To further enhance this cross-border investment in the wealth management products, I think we just highlight the cross-border wealth management pilot scheme in GBA, which was recently announced. And through that mechanism, mainland investor in GBA can invest in wealth management products offered in Hong Kong and Macau, and vice versa. And also, Carly mentioned about the new limited partnership regime. The LPF audience establishes the new limited partnership fund regime to enable private funds to be registered in the form of limited partnerships in Hong Kong, which came into operation on the 31st of August. And I recall there are 11 applications received on the first day of the implementation. So it's a very positive feedback on this particular new launch. And also, another related and exciting development is the government's endeavor to enhance the competitiveness of Hong Kong's PE platform on the tax front. As announced by the Financial Secretary, Paul Chan, in his speech this year, the government is working to introduce a highly competitive tax concession for the carry interests, which will take a retrospective effect from financial year 2020 to 2021. So it will have a retrospective effect from 1st April this year. Also, in terms of innovation, Hong Kong can be a bridge and can act as INT development transfer platform. And Pádraig highlight about the IPO of the Ant Financial, which is a mega IPO, obviously, and it is more a fintech company. I agree. And just to give you some numbers, in fact, Hong Kong IPO market is very strong compared to other countries. So as for the first half 2020, it's more than 80 deals, and total fundraisers is more than 88 billion Hong Kong dollar, and the number of IPO applications is more than 120, and IPO oversubscription is 96%. So compared to 2019, every number is much better than last year, despite COVID-19. So I mean, in short, despite all the troubles, the trade tension between US and China, social unrest, COVID-19, we have a very positive IPO markets here in Hong Kong, which is a very unique and also a very good potential for family office investor who would like to focus on the final step on exits.
I agree. I think that's one of the key advantage that Hong Kong has this unique position to welcome more family offices to set up in Hong Kong. So thank you, Dixon. Pádraig, so from your view, what are the key governance issues for family offices, and how are they distinctive to family offices?
Well, I guess to answer this question, Bowie, this isn't necessarily a question that's distinct to Hong Kong, but it's good to speak about in terms of where the trends are in respect of governance and how that is affecting family offices in Hong Kong. But the types of governance issues, you know, a lawyer hears issues as challenges, the kinds of governance challenges that family offices tend to come across. Let me touch upon three. The first is something that would be quite common to occur with single family offices in the early days, and that is the embedded family office that then grows and emerges to become a single family office, and the conflicts of interest that can arise from that. These conflicts, because if you think of what a family office is directed towards, it's directed towards the management of the family wealth. In other words, the wealth that has already been created and generated by the primary business interests of the family. What that means is that the main function of the family office is to manage that wealth in a way that does not cause conflicts of interest with the ongoing core businesses that generated that wealth in the first place. And that management of the conflicts of interest, the separation of business interests from family interests, that is one of the challenges that is right across the piece in respect to family offices. Another example of a challenge would be in relation to, well, this is less a challenge, more an issue. It is something to try and reflect in the values of the family office itself, which is what are the things that are unique to that particular family that they want to show and demonstrate, be it in their investment philosophy, in terms of their philanthropic efforts, in respect of how they manage the wealth for the benefit of the family as a group in its entirety. Those kinds of issues are very unique issues to family offices. If you're to make a contrast, maybe to pure corporate governance principles, where essentially the whole objective of a company is to make a profit. It doesn't really take account of too many other interests. Well, it's exactly this, the opposite when it comes to family offices, where there are a number of stakeholder interests within the family and a number of different interests that need to be served by how the family office is managed and operated. And the final issue that I would look at is the direct issue of how you construct a governance model that works within the context of a family dynamic. So if you think in terms of a corporate business, oftentimes those that are in leadership of that business are people who are maybe promoted through the ranks and get to a particular stage where they have the responsibility of being a CEO or some other C-level executive function, combined with other senior people or who are then appointed as independent directors in order to give an overall flavor and philosophy and view based on experience, corporate and commercial experience in respect of the affairs of that particular business. That's not necessarily how it works within family offices. Sometimes within family offices, the people who are in that role are more there because they are active and willing, not necessarily because they are capable. And one of the challenges within the governance of a family office can be that if you have only family members that are in that governance leadership role, it can become a bit of an echo chamber. And you don't have other voices or other views that can help in respect of improving the caliber of the functions performed by the family office. So, what you see in terms of trends addressing these issues are, more clear guidelines and processes around management of conflicts of interest between family interests and business interests, and also more of an openness to bring independent expertise in at the governance level of family offices, either through appointments to the board, through appointment of independent professional trustees, or even through advisory boards and committees, but bringing in that experience from outside to avoid the issue of it being a little bit of an echo chamber within. So these are some of the issues, but what you see within Hong Kong is that the ways and means of addressing those kinds of issues and challenges, there's a high degree of expertise and flexibility within Hong Kong to be able to support family offices as they evolve and grow on that journey.
Thank you, Pádraig. I think it could be very tricky, complex when it's, involving a family members, or perhaps everybody might have their own agenda, so it could be very complicated. But I'm sure, with all the experts here, can give all these popular advice to anyone for setting up a family office in Hong Kong. So, Kelly, so speaking about you, can you share some experience of Chinese clients for the financial services in Hong Kong? Any unforgettable experience you can share?
Oh, okay. In our office, I think about 75% of our clients actually Asian clients, and most of them are from Asia, from China. And then many of them actually came from the TMT section, because we do have a very active IPO markets in Hong Kong, like all the Shenzhen, all the giants were actually listed in Hong Kong. So all these clients, when they are investing, they pay more attention to the investment in the technology area. So this is one of the observations that I have. When they are investing, they try to find something related to technology, and then they are very open to try the fintechs when it comes to managing and also reviewing their financial portfolios. Yeah, and then I think Hong Kong is a perfect situation, or a perfect location for them, because we do have, as Dixon just mentioned, we are one of the biggest PEVE hubs, apart from China. I think we have around 500, correct me if I'm wrong, like 500 PE and then VC firms in Hong Kong. So with this big hub of like asset management market, all the investors, so they can easily find a good opportunity to invest, and then also can have a very good opportunity for them to exit. So this is the this is the experience that I have from my clients when they need financial services. So speaking for the fiduciary services, I think the clients, fiduciary services in Hong Kong, clients still need the similar services, like the structure for their asset protection, succession planning, and how to plan for the handover of the wealth to the next generation. They might need to set up trust, PPC, employee benefit trust, and then or the employee benefit trust at the operating companies level. Funds set up like limited partnership funds, or just purely a holding companies. I think the type of services they need will be pretty much the same, but I think one of the quite interesting bit is the expectation on our turnaround time for the delivery is getting shorter and shorter, right? I guess that you, like Pádraig, maybe you also agree with me, but I think the professionals in Hong Kong are so well trained and flexible, and then we are doing a very good job in adapting to this trend.
Thank you. I agree. I think one of the uniqueness of Hong Kongers is that we are very fast, we are very adaptable, and we are flexible. So I think those are the key advantages of being a Hong Konger. So Patrick, my next question comes to you. What are the emerging market trends right now? Can you share your view with us?
Yes, Bowie. The emerging market trends right now that we're looking at and we're very bullish about is one is AI. So for example, virtual assistants like Siri, Alexa, then we have self-driving cars like Tesla, personalized recommendation software like functions like Netflix, and then prediction functions in ride-sharing apps such as Uber. We've also made a big bet on a company in the US called Fubo TV, which is in the live streaming segment. So it's like the Netflix for sports. So all MLB, NBA, NHL, the UK Premiership, all those games are what we call cord cutting. So no longer you need cables, but people pay a fee monthly. You have multiple users like Spotify, like Apple Music, where you can watch high quality sports live. We have obviously FIC, which are and the is topic and industry that we am I on?
Yeah, you're on.
Can you hear me?
There was a little.
Oh, sorry. And then another big topic that we're looking at is biotech. So obviously, because of COVID, there's a lot more interest in finding a vaccine. But I think biotech is here to stay. So a lot of companies which will get very good valuations in the tech space, both in the US. I think Hong Kong, we need to re-engineer and reposition ourselves so that we can attract more outside capital and also other themes. Real estate is also something that we will traditionally look at, but because of real estate coming down, there's also going to be a lot of good bargains that we will look at. Gold is obviously an asset class that investors always look at when there's some kind of crises. Technology overall, something that our family office is quite adventurous in doing is looking at blockchain and crypto investments as a hedge to other things. But in terms of macro trends, what we've seen recently is that in, for example, private equity and venture capital, there's actually a lot of big M&A mergers in place that we're looking at. For example, there's talk of UBS and Credit Suisse merging together. Singapore made a big bet into Ant Financial with like $1 billion investment. I think Hong Kong still has a big strong point in terms of making good investments in the stock market. But in terms of entrepreneurship, I think we still have a long way to go. I think the unicorns are still very China-centric, and I think we need more and more champions from Hong Kong. A good friend of mine, David Yeung, the CEO and founder of Green Monday, they did a very successful round recently where they raised 70 million from TPG and also Swire to fight, to make everyone, I guess, vegetarian. His mission is very simple, is to try and make the world try to eat more plant-based foods. And the mission is very admirable and honorable that he's trying to change a Chinese population to try and eat plant-based meat like pork, which is great. And now he said the first few years was done in terms of years of education. And once the education is now, I guess, complete, more people are trying to do more sustainability kind of investments. So I think people are more astute, the more sophisticated. It's not just about the numbers, it's also about a purpose-driven investment. So these are just some ideas and themes that we are quite bullish about.
Thank you, Patrick. I agree. I like Green Monday. I've been seeing them for quite some time, many years, and I'm very happy to hear they got this big brand.
Yes.
So yeah, and the other companies such as Beyond Meat, right? So it's also plant-based product, and they are doing really, really good. And I actually didn't get a chance to taste it, but one of my friends actually did and said it was, it tastes like the same. So I'm curious and look forward to try one day. So question goes back to Dixon. This is a question about, the growth, right? The growth drivers and the latest trend, what do you consider to be the main drivers of growth in family offices in the region?
Thank you, Bowie. In my view, I think the main driver of growth in FOs in the regions, well, just a very few and key ones. First of all, is the growth of the ultra high net worth individuals. Well, as I mentioned earlier, as per the Credit Suisse Global Wealth Report 2019, around 39% of the global wealth was from Asia, and around 28% of ultra high net worth individuals were living in Asia. So in comparison, in terms of family office establishments, family office located in Asia only represent around 18% of the total number of family offices. So I mean that the growth is here. And secondly is the new wealth generations. Entrepreneurs from China have quickly risen to become the world's second largest billionaire group, and nearly one eighth of global billionaire wealth is from China. Given the growing wealth in Asia, it is not surprising that Asia families are planning ahead and also starting to institutionalize the management of the family wealth. So family office is the most effective structure for any ultra high net worth family that wants to preserve and also transfer wealth for the family over the long term. The third one is I mentioned earlier about the GBA opportunities. The family office seeking investment and also business opportunities will certainly benefit from establishing a presence in Hong Kong, which offers easy and convenient access to the Greater Bay Area. And the number of unicorns in the GBA is growing, and the valuation of unicorns in GBA also increasing. Under the GBA, Hong Kong is also working with the mainland China authorities to explore the establishment of other connects apart from Wealth Management Connect, which will allow two-way access of a wider spectrum of wealth solutions and products to both jurisdictions. And lastly, but not least, as Collie has highlighted about the fiduciary services in Hong Kong, the need for succession planning. I think the rapid growth of Asia's family office segment has been driven by succession planning needs. Whilst family offices are mostly or most famously known for investing, a lot of the other activity involves succession planning and next generation prepping. In turn, family offices are ideal vehicles for those looking at how best to preserve the wealth for generations to come. I agree with Carly that the turnaround time expected by the clients are much quicker and faster, and we have a strong talent pool in Hong Kong, and I trust that they can do a very good job, and it's just a matter of time to get used to all this changing environment. So I think fiduciary service in Hong Kong and the need for succession planning would be my last point to add on this.
Sure, thank you, Dixon. Pádraig, speaking about the structure, right? I have a question. What structure or arrangement is sensible to address the variety of interests that appeal to family offices?
Well, I think you can divide that into maybe two parts. One is if you look at overall structure, and that's actually far too complex and customized an issue to speak about in any great degree of detail, this evening. But one thing that you can say is that in terms of the structures that are available in Hong Kong, they are as you would expect them to be. So the ability to set up companies here is pretty straightforward. The trust services, arrangements and fiduciary services in Hong Kong, it's also a well-known and established service provider in those quarters. And actually, those service providers need to be regulated and licensed through an independent regulator formed under the company's registry here also. So there is good standard keeping in terms of the those particular services. I think one thing that is possible to speak about in a degree of detail is something more on the arrangement side rather than necessarily on the structure side, because so much of the structure depends on the specifics. But in terms of the arrangements, you can help a family office to identify what its needs, its goals, its objectives are, and to work through policies and procedures and other systems that can help them to achieve those particular goals and objectives. So to give you some examples on that, you can have a situation where you could ask the family office or the senior leadership of the family office to identify, say, a mission statement, key core principles that they want to enshrine within the family office. And some of the things that I think would be important principles to demonstrate within that mission statement would be principles like accountability, so that if you adopt a senior position within family governance, that you are accountable for that, responsible for that, and that you take that role seriously. So you'd have accountability. You would also look for engagement, because engagement is how you bring the next generation of the family through, both in terms of experience of operating within the family office, but also experience in life and experience in moving through maybe levels of responsibility and accountability within the family office itself. And how you achieve engagement is through information and making sure that proper and appropriate information is delivered throughout the family, regardless of whether you have passive members or active members, so that they're aware of what is happening, what is occurring. Now, how you would go about achieving that? There is some level of governance through maybe boards and committees and so forth. But actually, I think a lot more is achieved through having policies, procedures, and systems in place, so that there's almost an automated or a tried and tested way of making sure that these principles can be effectively carried out and implemented. You might do, and you will do, more formal things. You might do things like trust deeds if you're availing of trustee services, shareholder agreements if you're looking at how you can organize the different interests within a family and so forth. And those documents are important. But what you'll find is that many times those documents are not, if things are going well, if things are going properly, it's actually the subsidiary processes underneath those documents that make the most difference in terms of whether or not the core mission of the family office is being served by how it's being set up and how those arrangements are put in place.
Thank you, Pádraig. This is helpful. I have a question for Collie. How you as an independent trustee working with your clients and their family offices in Hong Kong, how are you doing with them?
Okay. For situation where the clients has this public trust company in their family office, as an independent trust company, we could we will assist the client to address the well, we can assist in several roles. One, for example, will be we act as an independent director in the public trust company level, or to provide a high-level supervision on the PTC administration of the underlying trust, and to monitor or assist with the general trust administration work. So we do this just to make sure that the work done by the client's in-house team are proper and also complete. And then we have to, and then it will keep our clients a greater peace of mind, and they can concentrate, and they can have more time to concentrate on the operating businesses or some other objective in his life, or they have more time to enjoy the life. Yeah, because in Hong Kong, I think like we have very good foundation in Hong Kong, like to as an independent trust company or independent multi-family office. We, because of the independence issues, then all the decisions that we made are actually to the best interest of our client. So I think this is a very important point, like for our client to know. So, and then this is Hong Kong is still a very good location for setting up multi-family office or a single family office.
Yes, absolutely. I totally agree. So my last question goes to Pádraig. So is there any difference a family office should be looking at right now more than the traditional industries?
Absolutely, Bowie. I think one word is sustainability. So the mission of sustainability is to improve the environmental health and the quality of life for our future generations. It's a new buzzword, I guess you can say that, but I think the world's really taking notice. There's two pressing issues. One is climate change and one is income inequality. One thing that Dixon mentioned was green finance is becoming more and more popular, especially in Hong Kong. I think the government is trying to do its best to try and make Hong Kong into a hub for green finance, at least in Asia first and then to the world. So why is sustainability important? It's so that if we address the two issues that I talked about, and if we have an objective, a purpose to do something, then sometimes the profits will come afterwards. So I think there's three things that we should talk about. The first thing is, sorry, the sun is getting in my eyes. Being purpose-driven is a competitive advantage. It's not necessarily a disadvantage. I think traditionally people are always seeing having a purpose-driven as something as a disadvantage. I tend to disagree now. If we have a certain purpose, the whole team can be self-motivated to get that purpose done. Second thing is, I think the new generation, the millennials now, they're willing, the new generation now of millennials, they're willing to pay more money so that they can achieve more to solve problems such as climate change and income inequality. And lastly, but not least, is that if generally a win-win situation is when there's a cooperative collaboration that creates more of a competitive edge. And if bigger corporations and smaller corporations, we all work together, we can actually get to the goal more quickly. So I urge and encourage all businesses, not just family offices, to take a more deeper look in terms of sustainable investment and impact investments. And that's what currently our family office is trying to do more of.
Sure, thank you, Pádraig. That was a very nice speech. I have a question, someone just sent it to me. I think this question can apply to Pádraig and Collie. Can you share one of the, I guess, the conflict incident that you might have throughout the years that you have served different family offices? Can you share some conflict example without names?
Conflict in what sense? Conflict of interest or conflict as in
I think you can
coming
share
to blows and having, you know,
situation and then how you solve it. So can you share?
I can maybe recall one instance, again, certainly without naming names, but I think if I generalize it sufficient, I think people will appreciate that it's a common enough situation that can arise, which is where the, you know, when you're dealing with family members and family investments, you're also dealing with people who are maybe more emotional in relation to the things that they're investing in and the particular objectives or goals that they're trying to achieve. And also you have, as in any walk of life, good apples and bad apples. One of the things about the family environment is that it is actually a more challenging environment to try and resolve and mediate those kinds of differences and issues that arise. So I do recall one occasion where there was a particular investment transaction that was being conducted, and the family member in question stood up in the middle of the meeting, took something from the table and flung it across the table, and thankfully missed the person I think the person was aiming at, and then, you know, left the meeting room. Happened so quickly that I wasn't in a position to intervene, and in some ways I'm glad I wasn't, because if I had, I might have been hit myself. So it was one of those awkward situations, but it's simply a case where, you know, emotions are involved and personalities are involved, and also there's an awful lot, or there can be more baggage that comes into these kinds of transactions or these kinds of decisions than is necessarily the case if you're in another type of a business where you're managing someone else's money, and you can be more dispassionate about it.
Sure, thank you, Pádraig. Anything would like to add, colleague?
Well, I would like to share one experience that I have, like when dealing with one of my single family office clients. A few years ago, the client set up the family office around 10 years ago in Hong Kong. They're from China, and there's two brothers. The second generation, the patriarch is still living in China, and they set up the family office in Hong Kong for the second generation to manage. But for some reason, because of some tax planning ideas provided by the tax advisors, and they will have to restructure the whole family office again a few years ago. So, but that makes the advice was that the elder brother has to give up all the interest that he has in the family office, like in the trust that they set up before. So of course, this is a very big decision, and then we work together with the legal advisors, two legal advisors and two accounting firms, like to come up with a solution as to how to restructure the whole family office again. At the date of like signing all the documents, the eldest brother who used to base in China, and the younger one is based in Hong Kong to manage the family office. So the eldest brother was in Hong Kong, and then he said, "I'll give you 5 minutes, because we have to go through the document and then sign the document, for him to give up all the interest that he has in the trust because of the future planning." So he asked me one question. He is holding his hand like this and about to sign, and then he asked me one question. He asked me, if you were me, what would you do?
Oh my
Whether
God,
you sign or not. So I think this is a very impressive moment that I got from him. And I said, okay, this is for your whole family. This is for the goodness of the whole family. It's not just for yourself. But of course, you do not have to sign the document. You just have to keep the old way and then do the existing, run the existing structure. But this is for the own good for your whole family, and the second, and then the third generation. And then he finally signed the document. Yeah, I think it's this is a very difficult position for him. Sorry.
How much talking about he gave up?
Well, I cannot tell. Cannot tell you about that, but it's a big amount of money though. Yeah, so he gives that up, and then yeah, it just need 3 signatures, and then he give up the sub.
Oh my God! Wow, that's very unforgettable. Wow. I have a question. I think Pádraig would be the right person to answer. So thanks, Natalie, for asking me this question. She's more interested into the green financing, and if there are any good return there, and if there's some risk now, since it's relatively new and it is unclear how successful it will be in the long term, and how do you, as an asset manager, then manage the risk?
Great question, Natalie. I think first of all is that I think the opportunity is huge. The reason being is where we have used a very short time in 150 years to more or less reduce the Earth's resources in all ways, from climate change to pollution, to animals, to wildlife, So there's many different aspects of what we're talking about, but no doubt that I think the world knows that climate change is such a big thing. And obviously China recently, I think about 10 days ago, they introduced that they will try to reduce all the carbon by 2060, which is quite a great task that they're trying to do. And then also since Trump has come into power, the cancellation of the Paris Agreement means that there's actually much more work to do if the US is not taking part in this. So in terms of a macro point of view, definitely there's more and more money going in. And I think because even COVID has also probably fast-tracked a lot of investments, not just from family offices, but big corporations and SMEs where everyone is trying to do their bit to try and comply and do more. For example, the 17 goals of the UN SDG goals, more and more people are doing more to do so. So more of this kind of opportunity, it will come to investors, both from an IPO standpoint and also in terms of private enterprises. So I encourage people to invest and look into much more into the green finance. And I think companies and countries, governments everywhere will be introducing more and more initiatives for tax-free benefits or tax incentives for investors if they invest into green finance. So maybe it's another thing that Dixon can talk maybe a bit more about how the Hong Kong government is trying to do more in terms of that. I was in a AFF forum a few months ago, and I was talking to some of the learned panelists, and we're talking of trying to make Hong Kong into a potential hub for green finance in Asia. And I hope that will come to fruition very soon, so that there's going to be more and more investments, not just for professional investors like us, but also for investors who don't know too much about what opportunities lie ahead for the green finance industry.
That's great. That's a great idea. I look forward to hear some good news, I guess, from Dixon in future about the green hub, green financing hub in Hong Kong, perhaps. I'm mindful of the time, and I think I will just take one last question. And thank you, Mandru. You would like to know how well entrenched of Indian family office in the overall Asian ecosystem, and also the interest of Asian family office in Indian markets. So I guess I wonder if Dixon or Carly or even Patrick can chime in and give your view on this question. Anyone would like to add on?
I can talk a little bit. I was talking in a Camden event recently with some Indian family offices. So I think traditionally Asian family offices, we've been quite late in the game per se. I think it's been a family office, the concept has traditionally come from European and American traditionally. And I think Asia, what we've done differently is just, it's been some patriarch. He's made a lot of money from different kinds of industries, usually real estate in the traditional families. And then they've ventured on to become a conglomerate by doing different kinds of industries. And India is very similar to China and Hong Kong, where, you know, big families like Tata, Reliance, all those big groups, and they've turned global. But I think traditionally a lot of the Asian family offices were still not very well structured. And it's still one guy or just 2 or 3 people. And usually the professional management are still not in place to help with compliance. And I think Pádraig mentioned earlier, sometimes when you need accountability of certain people to make decisions so that they're actually making decisions for the benefit and interest of the family group or the shareholders in this case, rather than just their personal know-how. For example, in China, there is no real concept of family office. This is growing and evolving into a better place. But in the past, there's a lot of like owners or bosses in China, they become listed or they become a family office. These people still believe that they're 100% shareholder and owner of the business. And actually, they're not really, they're actually a responsible stakeholder, and they should be responsible for the interest of all the shareholders and not just themselves, even though they may have started the company from the beginning.
Yes, I agree, Patrick. Thank you. And once again, I wanted to thank everyone who joined us, as well as all the panelists. And I particularly wanted to say, Patrick, because I think you're leaving in 5 minutes to catch a flight, and you still join our panel discussion. I'm very thankful for that. And before you go, let me catch you for one final thought or comment for our topic today, please.
First of all, thank you to Bowie. Thank you to my panel panelists, Dixon, Pádraig, and Kelly. Love to catch up with you guys in Hong Kong when I come back. I think, we've all experienced a very tough year and a half in Hong Kong. Hong Kong is my home. I love it. I think, in my opinion, we're the best city in the world. We've got rule of law, we've got financial, we've got capital markets, we've got one of the hardest working community and workforce that there is. I'm very excited for the next 5-10 years. I think there's a lot of exciting themes, and there's more and more unicorns actually coming out of Hong Kong. We have GoGoVan, GoGoX, Stephen Lam, they're looking to do great things, and there's going to be more and more of these kind of entrepreneurs. I think people like myself, we need to do more for Hong Kong. There's conversations that we're having that we want to have more with people like InvestHK, where we need to try and find all these entrepreneurs in Hong Kong, because entrepreneurs are the guys that change the world. They're the people with the ideas, and they need to execute and do the ideas. People like us, we're just financiers, where we help accelerate these entrepreneurs to do so. And I find it strange that with the talent that we have in Hong Kong, there's just not enough entrepreneurs or unicorns, and we must change that. And then again, I kept saying quite a lot today on sustainability. That's something that I've evolved over the last 6 to 9 months because of COVID. I spent more time at home reflecting on things that I think are useful and purposeful, not just for Hong Kong, but for China and the rest of the world. And we hope to do more. But family office is a relatively new thing for Asia, but I think we're getting better and better. We need professionals like Callie and Pádraig to advise people like us and to do better. And thank you once again to Bowie for inviting me, and hope to see everyone very soon. And I think my details are somewhere that Bowie will talk about. If anyone needs to connect and talk, please email or contact me in whatever way you can. I'll be back in Hong Kong in November, so hope to see everyone very soon. Take care and stay safe.
Thank you, Patrick. We should get on for lunch when you come back to Hong Kong in November. And speaking of contact information, this is the QR code directly to all of our LinkedIn profile. So simply just to scan the QR code, and you can add all of us. So thank you once again, Patrick. So Carly, what is your final thought or comment for our topic tonight, please?
Okay. Yeah, like three of you as well. I'm born and raised in Hong Kong. So Hong Kong, we do have a very strong base, like as an international financial center. And then going forward, I think, well, even though we have uncertainties, but I think we have no time like to feel sad, or no time to wait. We have to equip ourselves to make Hong Kong a better location.
Thank you, Carly. And Dixon.
Thank you. I think keep it very short. Hong Kong has a vibrant and highly developed financial market. Hong Kong is a leading private wealth management, we call PWM hub in Asia. Hong Kong is a premier international asset management center. And also Hong Kong has a unique access to mainland China investment and business opportunities arising from the GBA. And also Hong Kong has a very strong IPO markets here. And also the unicorns, there are a lot of good things to do here. That's it from me.
Thank you, Dixon. Yes. And Pádraig, it's a pleasure co-organizing this event with you. So as a co-organizer and also my guest speaker, what are your final thoughts, please?
Final thoughts as a co-organizer, I would, on that, I would just like to thank you so much for, all your hard effort in putting this together. But in respect of what we spoke about this evening, I think there's so many issues that go into how you go about setting up, operating, and managing a family office. I guess one of the things that came through tonight is that if the various factors are there, Hong Kong is one of those places where you can achieve what it is you're looking to achieve with flexibility, with expertise, and also in a well-regulated environment. For the investment opportunities, there was a lot of good insight and sharing from Pádraig. I certainly listened with interest to his views in respect of the technology sector. But we've had many good contributions in terms of the structuring, the fiduciary services that are available, the human experience of operating within this sector, and the bright future that lies ahead. So it was a great topic and a great theme for you to propose and for you to help to organize and to lead in the way that you have, Bowie. Thank you kindly.
Thank you, Pádraig. Thank you. Yes, I think that's pretty much all the discussions and questions that we went over. My final thought, I was born and raised in Hong Kong. I am, I would not say 100% because I did live Hong Kong for about 14 years. I used to live in North America, but I came back because Hong Kong is my home. And I think there's still, I don't need to mention all the advantages and uniqueness of Hong Kong since all the speakers already mentioned it. But I think in order to stay competitive for Hong Kong in the region, right, I think there's still potential some changes that especially the Hong Kong government might need to take into consideration. For example, additional tax incentives for ultra high net worth individuals or education incentive to lure professional talents needed to operate these family offices, and also streamline financial licensing for the family offices. And also perhaps if we get a new service center to enable the establishment of family offices in Hong Kong by foreign investors, but I think Invest Hong Kong is already doing that. So, anyway, I think I hope everyone find this educational talk useful and helpful. I think one more slide I have is I'm part of a True Global Ventures, which is a venture capital fund. I'm a small LP of this, and as a matter of fact, tomorrow we're having an event it's this 51st True Global Ventures Global Conference, and this is the panel that I will be moderating with lots of seasoned speakers. We have Jeff Stewart, we have Jonathan Lawson from Ping On, and so on. So if you are interested, feel free to PM me or email me. Let me type my message, my email address here. And I guess if you register for the event, you should have received my email confirmation. But anyway, this is my email address. Feel free to reach out to me, and do scan this QR code. This is the QR code for my meetup group, and you will stay tuned for all the event. And once again, thank you all for joining us tonight, and hope to see you all again in my future events. Thank you all.
Thank you.
Thank you. Take care.
Thank you.
Holly,
Bye-bye
Dixon,
now.
and Pádraig.
Bye-bye.
Thanks.
I can
Bye-bye.
set
Good
up
night.
a room. Pádraig, Holly, and Dixon, if you don't mind, I will set up a breakout room so that 4 of us can join. Would that be okay?
Yeah, that's fine. That's okay.
Let me do a breakout room. Just 1 second, please.